Okay, that was, of course, Nilesh Surana. But on to the Happiest Minds IPO. We're now joined by the promoter, very special management, Mr. Ashok Soota. Thank you so much for taking out the time to talk to ET now, sir. Congratulations, firstly, on a stellar listing. We've seen a very strong response from investors, over 100% gains on listing day alone. How does it feel, and what's the way forward for the company post this very strong listing?
All of the people who helped to make the IPO successful, and that obviously includes our bankers, our legal counsel, our auditors, our board members, and of course, mostly our wonderful team, to whom I'd like to dedicate this IPO. And now, in terms of how it feels, I do have one little mixed feeling here, I must tell you. See, from the moment we've had this huge response, there's always this feeling of saying that they're going to be disappointed people who applied and didn't get their shares. And you can see this from social media comments, etc., of people who are disappointed. Second aspect is that it, of course, creates a responsibility on the teams to be able to deliver on the expectations that it creates. And to that extent, it's a challenge. And of course, it's a challenge which is something that we must look forward to and see how we move forward in our journey from there.
Right, Mr. Soota. And you know, the mega trend post-COVID, at least us here at ET now, that's really becoming apparent, is that there's been a mass acceleration in the adoption of technology. Now, you have 97% revenues coming from IT services, and a lot of it is digital. So at the industry level, what's the kind of opportunity for an IT services company like yours? And how much of this can you potentially capture in the near term or next 2 to 3 years?
You know, I should clarify and make a distinction between what you call as a broader IT services market and the digital part of the IT services market. So we as a company, when we say we are born digital, born agile, 97% of our business comes from digital. And the traditional IT market is growing much smaller, which is why we're able to grow at a faster rate, say a compounded of 20+%, as compared to about 8% to 10% for the larger IT players today. And I would imagine that when you said again that the IT services business is growing, yes, it is. The entire market, typically in slowdowns and recessions, and more so in this one, where everything is becoming virtual, then IT will definitely grow faster. Within that, the transformation towards digital will also get accelerated. So from that angle, I'd say we're in a nice spot.
Okay, well, Mr. Soota, this is Mubina as well joining in, and congratulations on the stellar debut. Now, you're primarily into IT services. Is there any plan to perhaps expand into other verticals, or would it be sort of limited to verticals that are similar to the ones that you're currently present in?
We should be clear that we are an IT services company. We are not in any other business, and neither do we plan to get into those businesses. But when you talk of verticals, see, the way we define and the whole industry defines verticals. For example, our largest and fastest growing vertical is edutech. You can clearly see how that's going to benefit even further in this environment, because everything is becoming virtual. The other vertical in which we've got a very strong presence is the rest of the high-tech world. Again, because it's a core competence at Happiest Minds. Between the two of them, they account for 42% of our business. 76% of our business is coming from verticals which have been only marginally impacted or not impacted due to this COVID situation. So from that angle, we're in a good position to build on the strengths. The other 24%, yes, they have been affected. But fortunately, again, we've got a very marginal presence, for example, in travel and hospitality, which is the worst impacted vertical. And therefore, what we've now got to do is to continue to build on the strengths that we are in. We believe we've got a pretty broad coverage in terms of vertical. So it's not that we are planning to get into any new areas, but the key thing in Happiest Minds, which distinguishes us, is the fact that we're always investing in new technologies. And then we build solutions and solution accelerators to get into those markets. And I'll give you one example here. When we began Happiest Minds, we were in what was called as the SMAC stack, which included analytics and cloud. After that, we have added over the years the Internet of Things, we've added machine learning, we've added virtual and augmented reality, and so on.
Okay, Mr. Venkat, we've seen margins improving in the recent quarter. How do you see margins trend over the next 2 or 3 years? And also, are you seeing any kind of pressure on the pricing front post-COVID?
So FY20, we ended the year with EBITDA margins of about 16%. Now, if you look at it, the fourth quarter of FY20, we had already touched numbers ranging between 18 to 19% of EBITDA. So what you see of 16% is for the year. From that point, quarter one, we ended with about 26% EBITDA. Now, I should give you a little bit of a background to the first quarter jump. We had quite a bit of tailwinds or upsides from some one-time reversals, and also the foreign currency situation that the rupee depreciated quite sharply vis-a-vis dollar. That added to the profits. So if you look at it, without giving you forward-looking kind of a statement, I would say that we could model our EBITDA to be between 21 to 22%. That's the kind of number that we've been talking about. But for Q1, given these one-time write-backs and the foreign currency situation, we ended up with about 26% EBITDA. So that's on the margin front. As far as you're looking at the pricing pressure from competition or from the markets, we are not seeing that in our case. Like Ashok mentioned earlier, 76% of the verticals that we are focused on really have not been impacted that much by COVID. In fact, we are seeing spends returning into them, and they are seeing growth. We are seeing them growing with us. So to that extent, we are not seeing too much of pricing pressure.
Right, Mr. Venkat, 76% of your business being insulated from COVID is definitely an encouraging metric. But, you know, coming back to the revenue growth historically, the CAGR has been 20%. So this is far higher than other IT companies. And while we've now understood that you're digital and not a traditional IT services company, can this CAGR ever be more than 20%, or have we pretty much maxed out now?
The mid-sized companies are growing between 8 to 10%, Poonam, over the last 2-3 years. So like Ashok had earlier mentioned, the part of the IT services business that we are focused on is the digital IT services business. So to just differentiate, if I say that there are two parts to the IT services business, one legacy and the other digital, the digital part of the business is seeing 20+% growth when you take a look at the industry growth numbers. So to that extent, our growth is in line with those numbers of 20%, whereas the other mid-size, be it large mid-size companies or the small-size companies, have been seeing growth in the range of 8 to 12% over the last couple of years.
Right, Mr. Venkat, thanks. So it seems that we're going to be playing around the 20% growth rate kind of ballpark. But coming back to you, Mr. Soota, you know, your stake has come down post the listing. Are there any plans to reduce the stake further from current levels? Also, you founded Happiest Minds and got it listed. Earlier, you founded Mindtree and got it listed. Could you share your interests in other ventures or plans ahead?
First thing I must tell you is, in terms of my own stake, after the dilution which takes place here, and I think, Venkat, that's open data, so I can say that. Right. So it'll be 55%. But then remember that we've got a very large proportion of our shares also held by our team members. So if you've got a question at the back of your mind as whether there could be a hostile takeover because you brought in Mindtree, etc. also, all I have to tell you is that there's no such threat. And there will never be, for that matter. So we will keep ourselves well positioned as far as that is concerned. Forward, again, I don't want to speculate on whether my shares will go up or go down. If we raise more equity, obviously, there's no immediate plans to do so. Whatever happens, we will keep certainly one thing in mind, that there will never be a threat to, in a sense, ownership, which could help and create a situation of a hostile acquisition.
All right. Well, Mr. Soota and Mr. Venkat, thank you so much for joining us today, and congratulations once again on a great first day on Dalal Street for Happiest Minds.